Pacific coast is spared, according to reports in this plan. But surprised to hear what the president's doing here, going forward with a drilling plan?
No, Connell, not at all. I mean, what we saw, especially in the when we saw in the President's State of the Union address, he was going to make some tough, hard-line decisions on oil and gas and open up some of those potential offshore areas that have been offline for so long. And so here's a chance now to start generating not only kind of federal revenues, but also lessen our dependence on foreign oil.
All right.
Also, the issue is that are these states also going to be able to maximize their tax revenue from this as well? And so that's yet to be debated.
All right, let's talk about the economic part of it, and then we can talk about the political ramifications, because there's some of those as well, Adam. First of all, just pure economics. This makes sense to you. Drill, find some oil here, and bring our dependence on foreign oil down. Sensible move, you think?
Well, I think so. I mean, what the estimates are saying, though, the data is about 30 years old, and part of the plan is to actually shoot some more seismic data to try to understand exactly geologically what we have there, and then we can target those formations accordingly. But with that being said, you know, here's a chance for us to lessen some of that dependence on that foreign oil and be part of the bigger picture of our dependence on energy. And it's not just a flick of the switch for renewables, I think, is what everyone's starting to understand. And so making sure that it's part of the big picture, going after new drilling, makes a lot of sense.
And finally, the politics. This is certainly a nod to the Republican side of the aisle, and maybe to some of the moderate Democrats who have been pushing for things like this. Does it help the president, do you think, to be more aggressive now in pushing for, you know, a climate bill and other energy legislation because he's kind of given a little here at the start?
You're right, Connell. Yeah, that's a very good point, because there is that climate bill that's looking to be pushed through here shortly. And so one of the interesting parts is that we're not going to really have access. When I say we, the oil companies and the public isn't going to have access to these reserves for many years to come. I mean, estimates are saying that 2012, 2013 is the earliest that we'd be able to conduct the public leasings of these lands, let alone the actual exploratory impacts. And so there's going to be impact studies, environmental impact studies. There's going to be public disputes, I imagine, and there's going to be certain revenue arrangements that are going to have to be figured out between the states before we can even access these lands and these reserves. So yeah, that's going to be some time to come.
You're going to take a while. All right, Adam, thanks very much for that. But 167 million acres of ocean, according to the New York Times this morning, from the northern tip of Delaware to the central coast of Florida. But as we said, the Pacific coast not involved to some degree. Let's take a look at the markets as the quarter wraps up. An instant audit from Adam Connors. He's at CK Cooper out in California with us this morning and rejoins us now to talk about where we are, and I guess where we're going, because everybody's been not whining, but everybody's been complaining, Adam, about the lack of volume. It's been the big excuse to not get in the markets, to say other people aren't either. But you would have missed a huge rally if you weren't in, because the volume hasn't been there since last March. What do you make of that? And does it worry you that there hasn't been much participation?
Yeah, Connell, it does kind of concern me. I mean, I said a few weeks ago, I mean, we were trading in the low 10,000s. You know, at that point, I thought that the markets may have been getting ahead of themselves. And I think that a lot of folks on my side are of that same belief. I mean, you know, are they recovered as fast as the market seems to have recovered in this last quarter? I don't think so.
But you're missing a big, I mean, if you're bearish
right.
like that, I mean, you missed out, right?
You did, and I absolutely did, and I'll be the first to admit that. But however, let's look at the unemployment. Yes, that's abating, but it's not abating like a hockey stick. Yes, we see some GDP growth, but that's not growing like a hockey stick. However, it seems like that our indices are the ones that are growing like hockey sticks. And so the indication with low volume, it still concerns me, Connell, because what can happen is the volatility can take huge swings, especially when large sums of money tend to go in and out of the market if we do see spikes of volume, which can push the markets rather quickly. So I think everyone's on kind of low volume eggshells, if you will.
I'll tell you what I think. Well, one of the big stories is going into the second quarter is not necessarily in the stock market, but we mentioned the bond market a moment ago with regard to high yield and what have you. But in the Treasury market, Treasuries are now on pace for their first monthly loss of the year, price-wise, and the yields have been going up. We had some troubling auctions last week where the demand wasn't really there. People are talking about higher mortgage rates now with the Fed getting out and what have you. What do you think is going to happen to Treasury yields, and what does that mean for investors here for the next few months?
It's a real fickle situation. I mean, you're starting to see the Treasury yields come to quite a subjective view. I mean, you have a bunch of interesting things that we're not really used to. It's not necessarily the markets figuring themselves out. It's actually a change of policy, of fiscal policy. And so quite frankly, I mean, it's anyone's guess at this point, unfortunately. I wish I had a better answer for you, Connell, but the way things are going to shake out, I mean, I'm not taking any bets, and I know a lot of folks are really kind of staying away from the game and watching everything settle out to see exactly how things really do settle out.
Because it's a question of, you know, how much demand is there to keep financing our budget deficit? Are the Chinese going to want to keep buying our bonds? Will they cut back and diversify? All these things that could affect the stock market going forward. Finally, we're going to talk about this more in a moment, but the other thing is the job market. We're coming up on the big jobs report on Friday. Are you betting on a positive number there? And again, we'll get into more detail in a few minutes, but are you betting on a positive number there? Because it looks like that's what's driving the market here the last week or so, that people are betting on some positive job growth.
You're right. And the positive job growth, I mean, what we're talking about is rather minuscule compared to what we really need to see. I mean, we still see estimates of 2010 being around that 9% unemployment. In 2011, maybe getting to 8%. I mean, that's still pretty far away, Connell, from the 4 to 5%, which we see as in a bullish market. However, these markets have turned rather bullish rather quickly.
Sure have.
And so I'm a little nervous once again. I'm a little on eggshells about the market right now, and think that it has potential room to fall back a couple steps, even if we have slightly positive unemployment news continuing moving forward.
All right, we'll see who's right at the end, I guess. Well, maybe we won't. It never really ends, right? Hopefully. Adam, thanks very much for coming on. We are going to talk jobs in a few minutes with Adam out in California. Jobs-related data in, all leading up to the big monthly report on Friday morning. ADP, private sector employment, is coming out later this morning. Let's bring back Adam Connors to continue our conversation that we started a few minutes ago on jobs. We were talking there in the context of how it's going to affect the markets. You know, in terms just of the general economy, are we at the point that a lot of people think we're getting close to of really turning the corner towards job growth?
Really turning the corner, I mean, I get concerned about that because traditionally folks expect this large hockey stick, this upswing of economic recovery, this long-term bull run. And quite frankly, Connell, I mean, I just don't see with the way the credit markets are right now, with the way the GDP growth is, with the way the interest rates are. I mean, all the signs point to a very slow recovery compared to what a lot of folks are originally calling for. And so I think unemployment is going to follow that similar tack. We'll be some studs and sodders, and we'll be falling down or falling forward, depending on how you want to look at it as far as unemployment goes.
All right, so you have your doubts, certainly. My friend Tony Crescenzi is also now out in California. He's at PIMCO with Bill Gross and company and whatnot. He sent a note out the other day. That's right. And Tony says there's a number of things kind of building up in the economy that lead you to believe that we're just about to turn. He said, for example, non-farm productivity, best gain in 51 years. That indicates a stretched workforce, he would tell you. Temporary employment, 5-month gain, 16.5%, fastest pace ever. Delivery speed slowing in the ISM. Record low wholesale inventories relative to sales. He just says you look at all this data and, you know, got to get to a point where companies are going to say, all right, now we've got to turn that in and start hiring workers because we can't stretch people anymore. We've been doing more with less for far too long.
Sure. I mean, there's that to look at, and then also we haven't seen the tech recovery come back either, and that's something that everyone's been waiting on. And the argument currently in the markets and just the scuttlebutt out there is that you know, are we going to be spending more on technology because we've learned to be a little bit more leaner? And are we going to replace the overload and the fat that we trimmed out over this recession with technology and invest in the infrastructure with that until until we get to that capitulation point, as your friend at PIMCO states? I mean, all those points are very valid. However, at this time, I really still believe that it's going to be less of a turn and then a takeoff versus maybe a slight shift and then an upward movement. It's why it's a great debate, because one of the things that economists rarely get right is how many jobs we're going to add or subtract per month. And they just don't have the model to do it, apparently. And, you know, it's just a difficult prediction. Brian Westbury was on with us last week saying, oh, they're going to be 300,000 jobs added. Others say maybe it's 150,000 this month. What would be a number that the market would look at and say, wow, maybe we really are getting things going? And on the opposite side of that question, what's the downside number that said, wow, we really have some work to do here? What kind of range are you looking at for Friday morning? Sure. I mean, I could be a smart aleck and say, 1 to 2 million ads. Yeah. But, I think anything that's on a higher end of the or what people are expecting, that 3 to 5 or something to that effect, I don't anticipate 500,000 jobs being added. But if something like that were to happen, which it's bound to happen, Connell, 1 month, we're going to see some things that are going to be blow away our expectations over the next few months. But I think there's also expectations that are on the downward side because, like I said, I think it's going to be a.
Well, so if it's
couple
less than
steps.
100 or something like that on Friday morning, it would be a
Exactly.
disappointment. Now, the thing is, people won't be able to trade on it in the equity market on Friday. It's Good Friday, so there's no stock market trading, which kind of adds to the intrigue of all this. If the number becomes a real big surprise,
Sure.
might be a big reaction on Monday. Adam, thank you very much.
Yeah,
Adam
yeah,
Connors
very true.
From CK Cooper in California with us. All right, Ashley, back over to you now.